Holy shit, what's going on, everyone? So, remember the whole BlackRock deregistering as an investment company deal that came out a few days ago? They filed for this on the 31st of August. Are liquidations coming for iShares? That's what it may appear to look like. So, remember this iShares US ETF company got a couple documents here filed for the SEC, letting them know they're going to deregister as an investment company. So it says here in the filing, conclusion of fund business. Is the fund a party to any litigation? No. If yes, describe the nature. Is the fund now engaged or intending to engage in any business activities other than those necessary for winding up its affairs? No. Largest ETF company is deregistering as an investment company. That is insane to me. Now, summary. Applicant seeks an order declaring it has ceased to be an investment company. Applicant has never made a public offering of its securities and does not propose to make a public offering or engage in business of any kind. Filed August 31st. So why close? Let's take a look at the reasoning for this. Since the first rollout in 1989, exchange traded funds, or ETFs, have become one of the most popular investment vehicles. In 2020, there were over 7,600 ETFs globally, but more than 180 ETFs closed in 2020. So what happens when an ETF closes and why? Reasons for ETF liquidation. The top reasons for closing or liquidating an ETF include a lack of investor interest and a limited amount of assets. An investor may not choose an ETF because it's too narrowly focused, too complex, or has a poor return on investment. When ETFs with dwindling assets no longer are profitable, the company may decide to close out the fund, generally speaking. ETFs tend to have a low profit margin, generally speaking, and therefore need several assets to make money. Sometimes it may just not be worth it to keep it open. Now, the liquidation process. ETFs that close down have to follow a strict and orderly liquidation procedure. The liquidation of an ETF is similar to that of an investment company, except that the fund also notifies the exchange and the SEC on which it trades that the trading will cease. Shareholders typically receive notification of the liquidation between a week and a month before it occurs, depending on the circumstances. The board of directors or trustees of the ETF will approve that each share is individually redeemable upon liquidation, since they are not redeemable while the ETF is still operating. They are redeemable in certain creation units. Now, investors who want out of the fund upon notice of liquidation sell their shares. The market maker will buy the shares and the shares will be redeemed. The remaining shareholders would receive their money, most likely in the form of a check for whatever amount was held in the ETF. The amount of the liquidation distribution is based on the net asset value or NAV of the ETF. Now, right here, we see funds winding up. In the case of a fund that has never publicly offered securities and plans to wind up, the applicant should check no in item 25 and include the following either in item 12 or 25. The point of that is that they specifically stated that they haven't issued securities, so we can conclude that they are, in fact, winding up. Now, that's a gigantic company to wind up. It's the iShares ETF company, not a specific ETF. And the CEO on this is State Street Bank and Trust Company, so interesting shit. Now, BlackRock's iShares is winding up or closing down. Are they preparing to liquidate? Holy jack to my teats. This one came out on October 20th, 2021. This is the order under Section 8F of the Investment Company Act of 1940 declaring that the applicant has ceased to be an investment company. Holy tits. If BlackRock's getting ready to redeem all of their shit, we're going to go moon soon, guys and girls. Jack to the tits. iShares may be liquidating. Maybe not. We'll see. Looks surely like it's pointing that way. So, hell yeah.